So let's start at the very beginning. Let's answer the question, what is investing? Investing is this idea that I am going to take some of my dollars today and I'm going to put them somewhere or buy something that will likely be worth more later. And there are tons of ways to do this. You can invest in real estate, you can invest in businesses, or one of the things that we love to talk about is investing in the stock market, investing in financial markets where you can trade a little bit of your earnings, a little bit of your wages, a little bit of the money that you generate today, and you can have that money grow for you through time into the future.
You just said it. When you start out, you are trading your time through wages to create margin or money that can be invested. And that leads to the next point. Why should you invest? And the big driving factor is you don't want to have to work with your brain, your hands, and your back for your entire life. It would be nice if you could have something else that replaces your labor and lets you spend time on your terms. And that's exactly what investing is going to do for you.
Now, it's worthwhile to make a quick differentiator because a lot of people use these words interchangeably, and we too even kind of do it. There is a difference in saving versus investing. When we talk about saving, that's someone just making the decision, I'm not going to spend some money today. I'm going to live on less than I make, and that less than I make, that margin I save. Investing is different, and let me show you why. If you are someone who just saved $500 every month for 20 years, at the end of that 20-year period, you will have saved $120,000. That's fine and that's great, but there are all kinds of forces out there working against you to where that $120,000 20 years in the future will not be worth the same thing that it is worth today. So if you actually want your money to work for you, to grow, and you were to invest that $500 a month over 20 years, if it could just earn a reasonable 8% rate of return, instead of you only having the $120,000 that you'd saved, you would have almost $300,000 by your money working for you.
This is the big reflection point I had once I figured out how money worked. I grew up in a household where my parents were very disciplined. They were great with saving money. But their idea of investing was actually just buying CDs.
Yep.
Basically, whatever cash was doing, that's what my parents did. And what I wish I could go back in time and have whispered in their ear is that they were doing the hardest part. The discipline or living on less than you make is the hard work, but they were skipping the most valuable component, which is actually letting your money work harder than you can. And that's what happens when you actually take the time. Don't just leave it in cash. Put that money to work.
Yeah, your money has the actual ability to multiply over time. If you go out to our website and go to moneyguy.com/resources, you can download our wealth multiplier. We talk about this all the time, Brian. We have these little cute koozies that we drink out of. It says, this $1 beer cost me $88 because we know that for a 20-year-old, $1 that they invest by the time they get to retirement age at 65 can turn into $88. We have a whole deliverable that walks through how powerful every dollar you have can be, whether you're 25, 26, 30, 35, 40. I would encourage you to go look at that because once you understand how powerful those dollars can be, it will get you excited about putting those dollars to work for you.
Well, also, you'll spend differently. Think about if you're brand new out of college or you've got your first adult job that pays real money. Instead of thinking about the car payment, because the average car payment now is over $700 a month, you'll be thinking about, hey, that one decision of maybe not getting as nice of a car with a lot less car payment or even paying cash for that vehicle will actually turn me into a multi-millionaire by the time I reach retirement. Just understanding what every dollar has the potential to become will change the way you not only spend money, but it will definitely help you get motivated to start investing and letting your money work super hard.
But it sounds great. It sounds wonderful in theory, and yet there are so many people out there that don't do that. So why don't people invest? Why don't they put their money to work? Well, here's a common thought that you might have had. Hey, I'm scared I'm going to lose all my money. It feels like gambling. How many times have you heard, Brian, someone say, investing is just like gambling. It's like going to Vegas.
Well, I try to remind people, look, some of the things you see out there on social media, they probably do feel like gambling, and that's because that is speculating. When you see stuff with crazy volatility that's no different than are you betting on black, are you betting on red on the roulette wheel, that is gambling. But if you're investing, there's a very high likelihood, especially if you give it long enough, that you will be successful, especially if you're just buying an economic expansion, the growth of the economy. Those things happen because they're tied into the human nature and desire to innovate.
And here's what's so interesting. We have this illustration that we show, and if you look at this, each one of these years represents a portfolio performance of just a 60-40 portfolio. We'll talk more about what that means in a moment. But what you can see is every year this shows how that portfolio would have performed. And you can see that all the way back to 1953, it seems like no rhyme or reason. Some years it'll make 12% and some years it'll lose 3%. It'll make 20% and then it'll make 3%. And there's not really a lot of rhyme, reason, or order when you just look at investment returns on a year over year basis.
Now, I've heard about studies where they take monkeys. And I don't know if surely they're not giving monkeys darts. So I don't know. Maybe they're throwing poop. I don't know what they're doing, but they essentially choose stocks and they have outperformed all these professional managers and stuff. And I can see how those type of studies could work. If you look at, on this one, we're showing annual performance and it does look like a scatter plot. And if I was thinking about a monkey throwing poop, I would be like, this is exactly what it would look like. But that's not what investing is. Investing is not a 1 year. You choose it, and at the end of the year, you hope, did we make money or did we lose money? Investing is something where you're actually walking away from what those dollars are doing for at least 7 to 10 years. And why do we say time is so important? Is because when you zoom out, when in doubt, zoom out, you can see if you stay invested for 10 years, instead of it now looking like a scattergram or somebody just randomly put dots all over the place, you can see we are very honed in on that 9% annual rate of return. It's an ebb and a flow based upon economic cycles, but it's all hanging very close to that historical average. It's pretty amazing.
Yeah, it's wild. In the short term, it looks absolutely sporadic, but over the long term, it starts to have some rhyme and reason. And what we'd say is if you have a long-term time horizon, then it's not going to feel like gambling. It's not going to feel like you're all over the place. But maybe that's not what you get caught up on. Maybe you say something like, okay, well, the market is about to crash. Shouldn't I wait? Well, the unfortunate truth is nobody knows what's going to happen in the market over the long term. But here's what we do know. Every decade, there are about 2 downturns. And more often than not, the markets are moving in an upward direction, and more often than not, the upward movements are much longer and last for much longer than the downward movement. So more money is lost in the market trying to avoid the next downturn than just participating in the next downturn. If you think the market is high now and you're waiting for a crash and you think that might happen, wait till you see where the market is 10, 15, 20 years from now, and you'll recognize it really wasn't that frightening.
Time in the market is so much more important. It's greater than timing the market. And I just want to give you guys a visual. If you think about investing, it's the yo-yo, a person walking down the street with a yo-yo going up and down. That's the daily actions of the financial markets. But you're slowly walking up a hilltop. If you think about somebody walking up a mountain or a hill with that yo-yo, yes, in the short term, they're going up and down, but every mile that they cross, they're going to a higher and higher elevation. That's exactly what's going on with the market. So don't worry about the daily ups, the downs. Is there going to be a crash today? Is there going to be a boom tomorrow? Don't worry about it. Just always be buying.
Maybe you say something like this, hey, I don't have enough money. I'm too broke. What's beautiful is if you have a lot of time, it does not require a lot of money. So even if you're someone young and you're just starting out and all you can save is $20 a month, we've already told you that $1 can turn into $88. Well, then you can figure out what can $100 turn into or $1,000 turn into if you have enough time. So don't let the thinking that I don't have enough be something that prevents you from starting to invest.
Look, when I first started out, you had to have like $100, $200 just to go meet minimum quantities. Now there's fun. I know Fidelity has zero minimum investment, so I don't care if it's $15. I don't care if it's $20 a month. Do something. I'm telling you, a little goes a long way. And this is the greatest time to be an investor. A lot of these investment companies now have zero minimums, zero fees, zero commissions, and they let you buy into the broad market index. This is a great time to invest, so make sure you're doing something.
Maybe you say something like, I'll wait till later. Again, he just said it. You should always be buying. It's all about habits. It's about building habits now that will carry you through the rest of your life. But maybe this isn't even the thing that you struggle with. Maybe the thing that you struggle with is, hey, it's intimidating. There's so much different stuff out there. There's so much information. There's so many voices, so many talking heads. I just don't know where to turn. Fear no more. That is exactly why we have this show. That's exactly what we are here for, is to take the fear out of your finances and help you do money better.
Well, even this episode is going to make the process extremely simple. We're going to lay out the steps, lay out the ways that you create your own personal success. So don't let this be scary. We're going to show you, and then you're going to fast forward and look at yourself 3 years in the future and be like, man, I'm glad I started this. This is so much easier than I thought. And then you're probably going to be doing a studio tour because you'll be a self-proclaimed financial mutant at that point.